Good evening. That should all be working. Hope you're all doing well. Usual stuff. If you can hear me, see my screen, let me know in the chat, and then we'll get rolling. Chris Thomas says all good. I tend to believe him, as does Space. Nice to see you, Amp. Sharif is here as well. Lots of familiar faces, some new faces. Fantastic. Hi, Adrian. Good day to Gary as well. Happy Monday to you as well, the Irish son of God. Fantastic to see so many of you in here. Not that we are short of stuff to talk about, which is a welcome change from the last couple of sessions. So first things first, number one, thank you to Bybit for sponsoring Technical Roundup. They give us money so you don't have to. So that helps everyone. Second thing, if you could do us a huge favor and leave a like on the video, that really helps us a lot. And let's get this to as many people as possible, so your free engagement internet points are happily received via the like button. So with that said, again, this is your time as much as it is mine, so that if there's stuff in the chat you want to talk about, something you want me to cover, I'll be more than happy to do so. The rough agenda for today is to look at Bitcoin, look at ETH, look at how some of the alts have reacted to the volatility. We'll talk about a trade I took, and then maybe go through our altcoin watch list, or talk about the whole DeFi stuff, maybe the whole PayPal news, uncorroborated. There's a lot to talk about, but we'll start with the technicals and then pretty much go from there. So we'll go with Bitcoin. I think the interesting timeframes really are the intraday timeframes and the daily timeframes. So again, technically, we are still within the same consolidation as before, right? Which is range high, range low, and then we've got our confluence at the midpoint, 9,300 or so. My view throughout these weeks has been that it is probable that price trades towards the range low, given we've had the fake out above the range high, but such ideas only derive validity should support fail on the daily time frame. And as you can see by pretty much every single close that was testing the level, right? You could look at pretty much all of these candles. There was not a single close back below the 92, 9300 level, right? Specifically, the lower boundary at 9240. So support was holding, and I didn't get any signals to sell this. Now again, if I were to insult your intelligence, what I'd do here as a classic YouTube thing is say, hey guys, do you remember the buy zone or the support zone from last live stream? Look at the fantastic move from there. Hope you all made money. I made 10 million, you know, all that type of shit. And of course, if we were to have a candle like this, right, then what I would say was, guys, you remember the support zone from last live stream? Well, it failed, and look what happened. Price went down. I hope you all got short, because I did, you know. And then obviously if price does something like this, I'd say, guys, look at the fake out at the support level. I told you to wait for the... I mean, it's just a total fucking farce. As you'll see by the trade idea, well, the specific trade that I took and got fucking stopped out on at the bottom, that was fun. There's always more depth and nuance to executing on quote-unquote obvious zones rather than just drawing boxes and seeing what price does. Okay, so that's if there's one thing I'll never do, at least try not to, is to insult your intelligence. So with that said, let's see where we're at now. Obviously a nice reaction from this level after all. First real pickup in volatility for essentially a week or so, right? Because price was very much stuck at the range midpoint. Now, where's that taken us now on an intraday basis? Well, we are at local, if you will, resistance, right? If we just, without doing anything complicated, again, you could use this wick here, you can use this high, this level of market structure, whatever you want to do. Price is at intraday resistance at the moment, so no positioning for me, and I'll talk about my trade in a moment. This is obviously a good sign, right? The specific move from daily support. Whether it's a short squeeze or not remains to be seen. But there are two areas. Well, we're going to talk about kind of the levels on the chart and how I think they should be approached. So from a current price action point of view, I think any pullback in order to be bullish has to make a higher low at this point, right? I think we've really spent a ton of time battering 9.3, 9.2 specifically. So if this strength has any legs to it, I'd want to see a higher low come in somewhere around like a broken level of resistance, right? So 93, whatever, you can map this yourself. Any pullback from local resistance, I don't want it testing support for the nth time unless it's really quick, like with a wick. I want proof that the market's willing to trade higher and continue bullish market structure by finding support at a higher low level closer to whatever this is, 93, 50, 9400. Okay, that's really important for me. In terms of bearishness, again, I think the highest probability case is still for failure at this level. I mean, look, I talked about the daily closes. There weren't even intraday closes below this region, right? And that's what ultimately triggered a long for me, which got stopped out at the bottom. Again, we'll talk about that. But in terms of bearishness, I still think probability-wise, failure at this level is pretty much the best trigger or the best quote-unquote confirmation that you could hope for. And then, as I said, objective would be the other side of the range at 8.6. Now, in terms of fading this and kind of shorting rallies, there are two things I want to say. One is that I'm not terribly keen on fading this in terms of my swing strategy. It's just, there's no daily structure here for me to get involved in. As you can see, this is kind of where the daily structure's at, or the higher time frame levels. So kind of here, only for kind of intraday entry triggers maybe, but I'll explain why I don't want to be selling this rally personally, right? Now, we are at intraday resistance, but for me, 2 points to make about rallies, right? Number one, I think probably my least favorite trade higher would be to sell 10K, right? Now, you might think that's a bit bizarre because, again, we had resistance, we had the fake out, we had the retest, so isn't this level resistance once again? Well, technically speaking, yes. But I think if we squeeze up to this level for like, what, the 5th, 6th, nth time, the probabilities essentially shift from this whole move up being a kind of bearish retest. I don't think I'm convinced by that. I think if we get as close as 10K again, at that point, we're in short squeeze territory with a quick kind of teleport to 10.5 or 10.7, right? So the way I'd articulate that is the closer price gets to 10K, I think the more likely we are for the volatility to basically continue, and the direction at that point would be to the upside, right? Which is why I don't want to fade at this technical level. I think if you are bearish on rallies, the place where sellers kind of have no choice but to step in is pretty much this pre-breakout consolidation structure, right? However you want to delineate this range here, maybe you do it like this: support at the highest close, resistance at the lowest close, right? And pretty straightforward. You have consolidation, breakout, fail, didn't get retested, and you get a bit of a void fill there as well. So that's the only other area which I think would be reasonable for sellers to step in at. Again, I'm not taking that setup, not a setup that I'm comfortable with, so close to where I think price might get squeezed. But if we're talking purely technicals, this 98, 97.40 pre-breakout range essentially is kind of the last stand level for me, where a lower high could form and price at the very least pull back towards a broken level of resistance anticipated to be support. Okay, so in terms of levels above market, I personally don't think 10K is a good sell, at least not for me under my system, because I think that has a lot of short squeeze potential rather than a technical test of resistance. Therefore, on rallies, the only other reasonable area is the pre-breakout or pre-breakdown, depending on which side you look at it, range at kind of essentially 9.7. Okay, but my view remains that in order to get bearish this, especially given this is kind of the first real pickup of volatility we've had in the week, right? Things have been really flat, and we've picked up off of a really key level of high time frame technical structure. The question is, would I personally want to be fading that either with a beaten up level or with intraday resistance? Outside of short-term trades, the answer for me personally is no, right? So we've kind of come back full circle that in order to get bearish this, I'm not asking for much. Just show me that support has failed, which it hasn't done in any of the intraday, which I didn't even realize until I started this live stream, or higher time frame price action. Give me something like this, right? Then I'll be on board. Otherwise, the first little pickup in volatility in a week with lower time frame market structure breaking, I'm not interested in fading that on a swing basis with either this or this for reasons stated. Does that make sense so far? And it's kind of a rule that I try to employ generally. If there's a period of really low volatility and kind of compression, whatever you want to call it, on the higher time frames, and then it picks up in one direction, I'll usually try not to fade it with the nearest level. Again, I think for short term, you can, we're at local resistance, you can draw this pre-breakout range. Again, for intra-week type of whatever scalping, short-term strategies, all very reasonable. But for me, when my system mandates that I get positioned, and even on a short and long-term time frame basis, around the levels essentially that I have on my chart, I don't have anything high probability telling me to fade this rally right now. Okay, does it mean you'd short 10k? No, Marga, I believe the opposite is true. Not that I'd long 10k, I just think if we trade up to here, the probabilities shift from this being a technical test of resistance into a short squeeze to go higher. So I don't think 10k is a great technical level of resistance, personally. Okay, I can quickly talk about the trade that I actually took and got stopped out pretty much like literally at the bottom. That was a lot of fun. So it does show a good example of kind of how my system works and some of the signals it generates. So that's always interesting. So the setup was essentially as follows. As you know, I like to look at price action at my high time frame levels. So I'll get them from the monthly, the weekly, the daily, and then I will usually look at lower time frames to get a hint as to whether the level is acting as expected or not. Right? So in this case, I knew that the daily candles were closing pretty much above this box, right? Which looks massive, but as a daily structure, it's totally reasonable. And then what happened, you can see that on the way down into the structure, price was just making lower highs and lower lows, right? Especially on the left side of the screen, quite clear bearish market structure. We got a period of consolidation here where price stopped making lower highs and the lows themselves kind of rounded off at the level itself. And then the key trigger for me, which actually is amazingly timed because I've got a 2-minute video on market structure on my Twitter account, I saw this bit of price action here, essentially, right? This breakout. Now, why is that significant? Well, because it achieved the following, right? It technically, for me, on a very short time frame, broke market structure, right? This move here. So again, lower highs and lower lows, the whole way down, really bearish. Things slow down. You go from a trending environment to a consolidating environment, and then evidence of strength by price breaking the chain of lower highs and lower lows and actually making a higher high, right? Breaking local resistance here. So when price was at this level, my system basically allows me to buy pullbacks at the level itself, which I did. Pretty much 93.10 or 12. Basically, I bought the top side of 9,300. Now, stop placement, this is where it gets interesting, right? So normally for a market structure break entry, as you'll know from the video, the stop goes at the low, right? So when you have this type of thing, higher high, and price starts to pull back, if I'm getting positioned on a pullback, let's say this is the technical level, invalidation is my idea has some technical validity as long as price doesn't make a lower low, right? Because we're anticipating that price is making kind of low, high, and then where we're taking the trade, we're hoping or anticipating, reacting, all these terms are really useless, but whatever. We are looking for a higher low to form. So as long as the higher low thesis is valid, as long as the old low isn't violated, right? Now in this case, that would mean I'd put my stop, somewhere here, or if I'm being extreme with it here, and maybe manage my way out of it if it goes against me. Now what I actually did was place my stop pretty much on this thrust candle here. Okay, now the reasoning for that was, why did I use the thrust candle instead of the level? Well, my view was that we've tested the monthly level 10 million times at that point, and if I'm caught on the wrong side of that level, hoping to execute a stop at 92.40s or wherever close to this level itself, I was honestly thinking that price is going to do something like this. So if I was wrong on the idea, I believed I had extra risk or a higher chance of getting slipped my stop big time by putting my stop at the level itself. Because my thinking was, if we come back and test this level again, it's done. So it better not do that. So I want to be out of the trade before it tests the level. And where can I do that in a reasonably technical area? This is too tight, so I moved one back and used the thrust candle stop. And as you can see, on the exchange that I traded it on, I pretty much got spiked out. I think it was just on the candle open, and I got rinsed. So that was that, and then I watched price do this and didn't get back on board, which is cool. But I think the useful part of for you as the audience isn't that I got stopped at the bottom. I mean, that has some comedic effect, sure, but it's really the price action and an insight into practically how I look at things. What are the core ingredients? 1, prices was at this high time frame area. 2, intraday price action, something we talk about a lot, like I'll have to make a decision there. The context is really important. So again, this point 2 being, you have the downtrend, you have the slowdown in the downtrend, and then you have the break in market structure. So that's always this kind of stuff that seems really obvious to you, right? Market structure, slowing down from trending to consolidating, etc. should hopefully be somewhat clear from my videos or content, whatever. But it helps to elucidate these matters, and I'm always talking about price action at a level. Hey guys, look at the price action at a level. Well, what the hell do I actually mean? Well, it's really this kind of stuff. How the context is forming at these high time frame areas that I like to monitor. And then number 3 was the trigger itself, pretty much doing business at the level, and then an unfortunate stop out, but I think one that was based on logic and one that I would take again, all things considered. Does that make sense? I don't think it was a greedy stop, Freddy. I disagree. I just outlined my reasoning for placing my stop closer as opposed to at the level itself, right? Just to be clear, the reason for the closer stop isn't trying to squeeze out an extra 0.3R. It's because my view was that I'd rather get invalidated early, because if we were to test 9.250s again, I thought there's a real chance that I'd get slipped a lot more on my stop and incur much more risk on the setup as a result. So I see Dixie took the same trade with the stop at the X. Well done. Good setup. Good setup. So yeah, that's kind of where Bitcoin's at now. I think that's, all things considered, pretty straightforward. We can talk about the daily close as kind of the final thing and where that would leave us. Now again, in order to derive market structure, I like to look at kind of higher volatility periods or clearer levels. But in terms of intermediate swings, if you will, I think if we close above this highest close here, so that would be a close above, where's the close of this candle? Above 95.20s, so pretty much any decent closes 95.30 and above, that would mark a decent break in daily market structure. Nothing crazy. Again, it's short term because of where the impulsive moves have been, but something like this would be at least short term bullish, right? Closing through this level, and then from the market structure video, you know that there are 1 out of 2 kind of ways of taking action on a break in market structure. The time frame doesn't really matter, all the principles stay the same. Number 1, again, is at the market structure level itself, if we're being aggressive, so something like that. And the first trouble area would be, again, 9,800, wherever that pre-breakdown range we drew was, and then the 10K level itself, which I know I don't want to fade, right, because of the short squeeze opportunity. Or alternatively, if we get the close in a short-term break in market structure here, a pullback to the 618 fib or 786, all of this kind of stuff, wherever you want to call it. Basically, I think at that point, risk defined by the thrust candle into kind of similar areas. Okay, so in terms of daily close, that's the thing to look out for. If we close above 95.30, that would be a decent sign for me for pretty much for the week. And then I'd look to either look to the price action at the market structure level, or if it fails there and gives a deeper pullback, go watch the market structure video on my Twitter. The methodology laid out there is fairly straightforward, I think. And again, that kind of takes us full circle. If we get a daily break in market structure, I'd look for a higher low on a pullback if we get one, right? Because again, it could quite simply, if this is our market structure level, close through it, give like a little dip, and then basically do something like this. That wouldn't be unreasonable. But if we do get a deeper pullback, well, you know what? I almost certainly don't want it testing this level again, right? I don't think it should if it's bullish. I'd want to see a higher low. Again, we've come full circle at the breakout level closer to 9,400 as opposed to 9,200. Okay, and at that point, we will have had kind of a low, high, and then a pullback to our higher low level here, and then look for a higher high, or at least technical resistance, as mentioned, in the pre-breakout range, or the 10K level itself, and holding some on top in case price goes creates essentially the squeeze scenario we discussed. That's where price is at now. Daily close below it, again, wouldn't tell me too much. You could argue that a daily close below that level would kind of be a stop runny type of hunt thingy, trade through a value area scenario where it kind of spikes a swing high and then trades down. But even if that happens, I still think the reasonable backside sell setups would have to still occur on a break of 9.3 as opposed to selling into 9.3. Okay? Thoda asks, when using the fib for the higher low, do you use candle closes or the wicks? I personally use the candle closes, but I think wicks are fine. I think as long as you're consistent, doesn't make much of a difference. At this point, would you consider leaving limit orders with a stop beneath the low of the structure, for example? I think that's reasonable, especially if the daily close aligns. It's just my system doesn't have pretty much any scope for limit orders outside of pretty rare circumstances right now. But yeah, I mean, purely technically speaking, I don't think that's the worst idea, but I think I'd want the daily close to be aligned in one form or another. And again, all these ideas, etc., we're kind of at local resistance right now, so I don't have a setup to chase this even if I wanted to. Okay, what I would want to see is a higher low, and then I think if this is kind of the start of the volatility we've been waiting for pretty much a week, maybe 2 weeks now, I wouldn't want to fade it with 10k. That's kind of my technical outlook right now. So Bitcoin should hopefully be clear. If it's not, go back and replay it. Any questions in the chat, I'll do my best to answer. But that's where we're at right now. Okay, and I guess in the grand scheme of things, not a whole lot has changed, except volatility has picked up to the upside at a key level, and I'm not interested in fading it. Okay. ETH has been very interesting. We can see the outperformance. Again, we'll join ETH BTC shortly. Looking at ETH USD, right? We had the reaction off our cluster top that we're waiting for. I honestly wasn't expecting this move. I was expecting price to basically turn around at FTA. Sorry, I'll be a bit neater here. I was expecting price to, as it often does, turn around at intraday resistance and then offer essentially a retest at the level and actually spend some time within this range. Obviously, the market disagrees. And we've traded higher. Okay, so we've now hit the daily lower high levels. You can see it's a previous resistance that we've had from other live streams. Where does that leave ETH market structure? Again, sort of in a similar boat as Bitcoin, just slightly ahead. Where you have we're discussing with Bitcoin whether we want this close would be short-term bullish, and it looks like ETH is almost certainly going to close above this level and essentially trading into resistance here. Setups wise, honestly, I haven't considered a whole lot for ETH. Yeah, honestly, for me personally, in terms of executing kind of either side of this, it still has to be within this cluster for me. And again, not the whole box. I'd need setups either at the upper boundary, right, at 223, or at the lower boundary. I don't think there's a lot here for me personally with my trading style. I don't want to breakout trade this into the next level. It's not something I typically do. Kind of gun to my head intraday support, right? If this is just going to keep running, where is the first most reasonable kind of pullback level? I think it's kind of the same technical structure that we had for Bitcoin, right? This here. And this level lands at around, what, 237, 238. So a really kind of shallow pullback scenario would be into here. I think a similar structure for Bitcoin would be this gray box here. So that's a, you know what, let's actually keep these. Fuck it. We'll see if this intraday stuff lasts us one way or another. So for ETH, the kind of most aggressive, extremely shallow pullback level is at more or less 238. Okay, that's kind of what we're looking for. And for Bitcoin, the equivalent of the nearest SR flip level is essentially 9.5. Okay, so we're going to keep an eye on those. I'm going to keep it in gray and slightly fade it out because I put much more weight to my higher time frame levels. But we'll see next week, or maybe on Twitter or on Friday, wherever, whether perhaps we've entered the phase of a really aggressively trending market where it'd even be a gift to pull back here. We'll keep those levels on for now and see what happens. Okay, I think Bitcoin for me is much clearer than ETH. It's kind of the only thing that's extremely clear for me on ETH is actually the weekly chart that we've talked about, and I think that's to a large part what's driving the technical setups we're seeing. Right, we've got the best level or the best technical structure, I think, on the chart here. This consolidation, resistance, you got the fake out above it, retest, retest, consolidates for weeks, and then breaks that consolidation. And again, we came back and retested the level. Typically, price gives a shorter term bounce and then revisits it, at least on the daily time frame, before shooting off. Right, so even if it's half a week, it still looks like a weekly wick at that point. Whereas what has happened instead, obviously, is that little touch was enough to send price flying into local resistance, right? And no time frame makes that clearer than the intraday chart, where you can see that exact thing, right? Basically, the kiss of the level. Normally, something like this would occur, right, where it hits the intraday resistance level and then pulls back and spends more time at the high time frame level. No interest in doing so at the moment. Okay. So yeah, Bitcoin much clearer than ETH. ETH, if you want just a week-to-week bias, above the weekly cluster at 212, 223, as long as this structure is intact. My technical bias is bullish from a higher time frame point of view. In terms of generating trade ideas, gun to my head, not a setup that I can technically take it. I'm not going to rush into. Really aggressive trend continuation level at 238, but for me, I'd like to see more trading within the cluster, and if that means I don't get to catch the next leg into 260 or whatever, or I have to break out long this, I'm fine with missing that. Okay, that's just about the only thing that's clear to me. And I think if our gray box gets lost, if it proves itself to be significant and that goes down, it's pretty much the same test as Bitcoin, right? Where are we looking for a higher low? Well, we've broken market structure here and made a higher high, so we're hoping that essentially the low stays intact. I think this is part of the reason why I used to find intraday trading like pretty difficult around high time frame levels. I would essentially take really tight setups on lower time frames, despite there being higher time frame structure below it, and all this shit would always happen, right? It would come down, take out my stop, hit the higher time frame level again, and then give the higher time frame move. Surely that's familiar to some of you. Don't lie. Tell me in the chat if this shit has ever happened to you. You've got like an intraday stop or like an hourly, 15-minute, 4-hour, whatever. The trade looks amazing. Price comes down, takes you out. You feel shit. And then you look at the chart and realize that there was some amazing, fantastic, god tier support that just got kissed. And then the real move happened without you. Right? That used to happen to me all the time, which is why more often than not, and actually almost exclusively, I try to do business around my high time frame structures, as opposed to trying to be too clever and kind of make the assumption that this won't get retested. Okay, high time frame precedence, which is that higher time frames are more important or carry more significance and are more likely to be retested. That principle plays a really important part in my system, which is why I'm happy to miss setups and defer setups if it means I can do business where I want to do business. Okay, is that reasonably clear for ETH? Again, the weekly time frame's the clearest. Daily's not my favorite, and we have a little intraday pivot for shorter term bias. Does that make sense? Fantastic, fantastic. Okay, Ethereum, Bitcoin. Now, this is a very interesting one. Again, this isn't the instrument that's traded in itself, but it's also an index, obviously, of how Ethereum is behaving or performing, more specifically, against Bitcoin, right? At a time, it used to be a decent altcoin proxy, whereas ETH BTC were bullish. You'd want alt BTC exposure as well. I think that's faded to some extent, or is not as strong, but this is still very useful to look at. I'm sure those of you who inhabit Twitter, there's been a bit of a kind of narrative push and some kind of funny mentals on Ethereum and this whole compound protocol and DeFi and crazy yields and farming and all of this type of stuff. I try to not pay attention to it or not give it too much weight for two reasons. One is that after all, I'm a technical trader. If these fundamentals are meaningfully long-term bullish, I expect it to reflect on the chart sooner rather than later. Now that may be a very narrow-minded view. Maybe I'll miss the trend-forming portion of the move, but that has served me well generally. Okay. The second point about kind of DeFi and narratives and everything like that. I almost forgot what I was going to say. That was fun. The second point is that just anecdotally and observationally, whenever all the DeFi crowd have gotten quite loud with some new protocol or some raise or some money being invested or something else, that shit has just not gone well. Some sort of hack, some sort of vulnerability, and I don't know. DeFi, I think, has got some way to go. If anything, I'm not a huge fan of all the attention, specifically on the yield that's being generated. And clearly there are some more complex mechanics and mechanisms at play, because I've seen some screenshots of people straight up confused as to where their money has gone, right? So if it sounds good, too good to be true, it probably is. And if it isn't too good to be true, sooner rather than later, I'd expect the technicals to align. I think I've got a similar view with regard to the PayPal Venmo news that's currently unconfirmed. I think that's fair to say. They've got some sources on CoinDesk, but I haven't seen a kind of direct corroboration of that. And again, even if it is the case, while that can inform short-term price action, which is fine. If you've got an edge there, you know, be my guest. If this sort of stuff is going to lead the next run, the higher timeframes will fall into line sooner rather than later. And again, what I started with, I'm just going to revisit. This is the first real kind of pickup in volatility that we've had in some time. And it's coming into technical areas which I don't think are the best levels of resistance in the world, as discussed, which is why I'm particularly cautious in fading stuff like that, right? Thin markets, news-driven markets into weak technical levels with preceding low periods of volatility. I generally don't like to step in front of stuff like that unless I've got something really solid. Okay, that's just my personal approach. Now, looking at those very technicals, it does look like a breakout in ETH BTC. More still needs to be done. Two things specifically. Number one, you can see that the daily hasn't closed above this level yet. It's almost certainly going to, but once it does, or if it does, it's important that there are no closes back below the range low, right? Because it's not the first time that we will have had a daily close above the level. We had one here, it failed. Had one here, it failed. Had one on the level here, it failed. Obviously, the context here is a bit different with the size of the candle and the volatility picking up and whatever, expansion, blah, blah, blah. But I think the same rules still apply, that if this is the real break, this time it's different at the level, we'd expect price to act accordingly. And you can see that on the lower time frames as well, right? I like to look at acceptance, right? Not just the close through the level, but what is the behavior of market participants at a technical structure once it's been closed through, right? So in this case, again, you were getting closed above, but not acting as support, blah, blah, blah. So for me, number one, right? Two things to be bullish ETH BTC. One is if it does close through the range high, that has to, unlike all of these other cases, act as support. Okay, that's the first thing. The second thing is actually got to do with market structure. Okay, let's look at that very quickly. We can actually even do it on the. Do you want to do it on the weekly time frame? I think it's fine on the weekly time frame. Yeah. So market structure has not been broken on the weekly time frame yet. You've got a theme of consolidation. We've got higher lows and lower highs at the moment. You could argue that diagonally it's bullish, right? Because it did like this sort of thing, and I'm sure it looks nicer on the daily time frame. But purely market structure, at the moment you've got an equal high, not a lower high yet, but an equal high, and so lower highs and higher lows, and no break in market structure yet. So as we said, two criteria. One is the intraday range high flip, right? Intraday range high flip. We don't want the same sort of fake out structures we've been seeing with previous tests of this level, as you can see. And number two, we need the weekly market structure break. Now, what does that mean? For me, quite simply, a close above the highest close of the last weekly swing high. Okay, once that happens, any bullishness here, right? Any closes through there. Again, there are two routes to market structure. One is at the level, two is pullback. So at the level is something like this, and pullback would be whatever, something like this, where it makes a higher low and shoots higher. I think because of the amount of consolidation at the structure. If we get a break in weekly market structure, 1 is more likely than 2. I think basically this is more likely than the second scenario. I know we're getting a bit messy here, but just to be clear from a weekly market structure point of view, until we get a close or acceptance through the highest close of the last swing high, weekly market structure hasn't shifted bullish yet, right? But once it does, the good thing is there's loads of space. It's also like another feature of my trading system that I like to do business in areas where there's space between the level which I want to buy or sell and the next trouble area on that time frame. So in a similar vein, let me just get rid of these levels, delineate the market structure level here, right? Again, we're talking macro stuff. Any break, any higher high at this level, I think there's loads of space until the next level of resistance. For me, it's honestly somewhere closer to the range high at this stage. There's a kind of a range midpoint at this highest close here. And if you want to do the whole thing, you can pretty much go kind of resistance, support. The midpoint lands like roughly in this area as the first trouble area, okay? And then you've got the range high here. And then you can see the range low is kind of where we're trading at now. Does that make sense? So it would typically be enough for me to say, look, let me just get rid of this very quickly. Typically, it'd be enough for me to say, well, you've got whatever. We're going to eyeball this. You've got resistance. You've got support, right? And then whatever, eyeballing it, you've got the midpoint. Okay? Now, normally, it'd be enough for me to say if the range low gets reclaimed, you're bullish into the midpoint as the first trouble area, and then into resistance. The issue is there's been a lot of fuckery and fake outs at this level itself, right? Both on the previous swing entirely, where you had 2 weekly closes above, and then a swing down, but also on kind of lower time frames, even on this retest, which is why the test for bullishness is higher. It's not just that the level has to break for me to be bullish ETH BTC, but because of the fake outs that have occurred at the level, I want market structure to break as well. And then I'll say, okay, both support resistance and market structure suggest bullishness. And then we've got a lot of space until kind of the midpoint of the range and next resistance, and then the range high if we're crazy bullish ETH. Does that make sense? That's kind of another general technical principle I follow. Like if price isn't giving me clarity at a level, or if price is offering or creating a tendency to fake out at a technical structure that I think is significant, I'll either ditch it completely, or I will raise the requirements for me to get a clear read. That, okay, SR isn't enough, I need market structure to align, for example, right? And I think that's generally a decent approach to consider. Like, if you're not getting the type of clarity that you want at levels that your system tells you are significant, either ditch them or raise the stakes. I think that's not a bad way to look at these things. JL Belgium asks, how do you explain strange movement of Bitcoin in 4 hour today? It seems too regular to be organic. I'm not sure what that means. I don't generally like to explain strange movements. For me, it's just, we had a period of low volatility, technical support held, and then buyers stepped in, right? That's kind of the stuff I care about. You can always look under the hood for kind of order flow type of stuff and who was trapped where and candle structure and all of this sort of stuff. But I trade the what, not the why, right? As with my trading style. So it doesn't make a huge difference. I don't try to explain it, is the answer. Multiple levels that created equal market structure shows you that, asks Ryan. I think so. Certainly, I think if you don't know where to start at all, and you kind of have no reference points for support, resistance, what's important, what isn't, finding support resistance levels at market structure levels, which is kind of the same thing, really. It's support. I mean, these concepts all mesh together in one way or another, but I think, yeah, the answer to your question is yes. If you're looking for significance in levels, and a lot of your levels are getting washed or chopped up, etc., looking for high time frame swing highs, swing lows, and areas of market structure is a fantastic filter for those levels, right? And again, yeah, if you're enjoying the live stream, would love to have your support. Make sure to hit the like button and subscribe to make sure you don't miss any of our sessions. I think Yeros is asking about Bitcoin, saying, is it considered an SFP if we close the 4 hour like this? Let's take a look. pretty much, again, the thing about like the SFP and the pattern itself, which, you know, Tom Dante first really articulated, he says that maybe 5 or 10% of the time that people think something is an SFP, it is in fact an SFP. So more often than not, people get it wrong. I don't think, like, I get that argument, but generally it's more important not whether the pattern creator thinks it's a valid SFP under his system, but if it becomes so widespread like it has in crypto, the more reasonable question is, are people going to act on this bit of price action as an SFP? I hope you see the distinction there. In this case, I think so. Yeah, I mean, it's pretty much the highest close within the range, and if price spikes above it and then closes below for SFP traders, or the crypto SFP traders, I suppose, that would be a bearish signal and suggest a pullback. It's not something, again, for reasons stated, that I would be fading personally. But yeah, pullback from something like this, maybe into our gray box to show us the intraday magic, maybe something like that. But if I don't, again, my priority is to share as clearly as I can the stuff that makes sense to me and the stuff that works for me. And never to insult your intelligence by trying to pretend I'm an expert in something that I'm not, or pretending I have an edge and trading certain setups or timeframes where I don't, right? So as a technician, could I see something like, whatever, swing high, SFP here and pull back to the gray box? Sure. As an analyst, all of that kind of stuff, that's reasonable. That's just not a trade that I think I have an edge in taking, and doesn't suit my kind of current mandate, okay? And yeah, that would be a bearish SFP, right? Because you trade above the swing high, fail to break it, and then the people who bought or got stopped out on their shorts above the swing high feel the heat as price starts to pull away. Okay? Always remember that if you get a trade through a swing high that fails, that's always a bearish SFP, and the opposite is always bullish. Okay? Or that's the pattern context anyway. So we've talked about Bitcoin, Ethereum, ETH, BTC. A lot of the other alts have been quite boring, to be completely honest. To my surprise, and I'm sure Donald is in disbelief about this, Bitcoin Cash bounced off support for the nth time again. Not a whole lot to say about that, but didn't even reach the level this time. Just kind of bouncing off this area. Nothing going on there. EOS, not looking great. Not much has changed since last live stream. Again, look, the volatility has really fallen off on a lot of these, and it kind of goes back to the point we talked about with ETH BTC, how in the past, and I'm sure Exos in the chat get to see, mate, do you remember Luke Martin's ETH BTC channel, where if it were like at the bottom of the channel, alts were discounted and you just long all altcoins, and then if it were at the top of the channel, alts were kind of overvalued and you'd short altcoins, and that thing worked for like a year and a half until ETH BTC broke the channel and entered like a 2-year bear market. That was fun. But it kind of goes back to the point we made earlier about, in the past at least, ETH BTC being a more reliable kind of proxy for high cap altcoins. Whereas now you can see ETH BTC is kind of leading the pack, but the high caps at the very least aren't to follow. Sure, some of the comp, DeFi, lower cap altcoins aren't behind, but the high caps just seem to be kind of dry at the moment. XRP, I mean, goodness gracious. New lows, right? New lows in XRP, not a terrible amount going on there, and it's certainly far away from levels that I think are significant. And support for me is quite far away as well, so I'm not going to dwell too much on that. Link is actually pretty interesting. I've marked it up since last live stream, and essentially what we had was the following. We were looking at just one technical structure, to be honest with you, which was this consolidation here, right? You have an impulse move, price consolidates, impulse move again that formed the high. You get a bit of chop at the level, which is fine, right? Pretty reasonable. Price then makes a lower high, pulls back, and then just starts using the same red box as a range, okay? So last week, or I suppose the week before that, it closed through the bottom boundary of the range. So our view, or my view, I don't even remember exactly where we were within the weekly candle when the last live stream was that the red box is likely going to act as technical resistance, right? Now, the close itself was pretty interesting. It pretty much closed at resistance for me. So I think any weakness back below the upper boundary would suggest that the current price action is a wick. Okay, is the wick forming early in the week, and then First trouble area would be the cluster bottom, and then kind of, I mean, technical support here. But really, we're looking back towards this high if this thing is bearish. Okay, just look at that on the intraday time frame, what that would look like if the weekly close at resistance is going to materialize. It'd be some sort of pullback here that fails. Any retracements would expect to find resistance in this type of area, and then pretty much this would be the fake out above the range high and expect it to go to the range low. Okay, obviously that idea is invalidated if we get a kind of more bullish price action at the level, right? So no acceptance back below the range. At that point, we can say that the weekly time frame is actually bullish, and that was a great close, etc., etc. But where price is at the moment, either way to derive a bias, given we're at local resistance here, I'd want to see a pullback to 45, and that would inform my bias for the week ahead. Okay, but that's just a very important bit of context. The close was at resistance, and whenever I get a close at resistance and then price starts shooting through it, I need to ask myself whether this is the wick being formed or whether this is kind of early week continuation. Okay, so that's the interesting thing about Link right now. Tezos hasn't really moved much from support. Matic is an interesting one. It's kind of pulled back to one of our levels, right? I don't think there's a whole lot going on here. Kind of turned around between the two, right? We've got high time frame, we've got high time frame levels here and here, and then low time frame levels at 228 and 206. We had, again, one of the slightly lower caps that rallied. You can see a broke market structure here, and that's pulled back to the level itself. I'm personally not gonna sling Matic on Binance, but it's certainly decent in the short term, right? Nothing outstanding, but short term, obviously, when you see something like this, it's quite hard to be immediately bearish. But again, we plotted this. I don't think there's a trade idea that I'd be taking personally. With altcoins, I really don't like continuation entries. They generally, like, you've either missed the boat or you haven't to a large extent, especially with these shorter term and shorter lived market cycles. So I feel like with altcoins, I'd much rather just kind of buy support or buy reclaims of support rather than try to buy pullbacks on which get stuffed if Bitcoin kind of sneezes. I hope that makes sense. ADA hasn't really done much. It's still below resistance, and my next real level of support is significantly lower, kind of at 622. Honestly, this thing could just consolidate within its lower time frame range forever. This would be reasonable. But for higher time frames, either needs to break through 877, which I don't think is likely at the moment, or a much deeper pullback to where it broke market structure originally. So 622 is the first level, 577 as the other level. I think this scenario is more likely than anything else. We've got high time frame resistance and intraday support. Just form a range out of those two levels and kind of ping pong there. Again, nothing really crazy. And you can see from market structure point of view, pulled into this rally, broke down, currently making a lower high. So definitely adds some weight to the idea of ranging on the lower time frames. ZRX, not much going on. BNB, we really only have two levels that I think make sense, that are really good on BNB, which are both on the monthly time frame, and price is not looking... you know what, actually, so look, from the point of view of our levels, right, certainly away from reclaiming this, so not going to be macro bullish. I think short term, this could arguably look decent, at the very least as a kind of technical idea, because market structure, right, if we take this short-term swing here, we have the break, right, we've got a high, price makes a higher high, so now it's pulling back, and the question is, could it make a higher low, right? And then we have this kind of demand zone cluster boy here, and if we actually measure from low to high and add our good old OTE meme, we're kind of in that 786, all of that, this kind of area of market structure, retracement here, okay? So I wouldn't complacently be bearish this. If a higher low is going to form anywhere, right? We've got low, high, then we're in this higher low area, like in the market structure video, and then maybe we trade to the level. I wouldn't be complacently bearish BNB, but just something to be aware of. This isn't a coin I trade, so I'm not going to give you some spiel about support zone, resistance zone, but just be aware from market structure point of view, this area is definitely significant. By the way, did anyone watch the market structure video, the 2-minute one on Twitter? You can leave a comment in the chat or in the YouTube video if you're watching the replay. Let me know if that was helpful at all. I thought it'd be good to do a short form version of that to give you some context when I talk about market structure. If you want to see more of that kind of stuff, of course, let me know as well. Should have been shorter. Yeah, it's tough, man. It's tough teaching these things in such a short time. And I actually always do it with some reservation because I like the in-depth tutorials more than anything else. Some of the newer comments are like, oh, I wish you'd do longer videos, or you definitely rushed this. I'm like, dude, have you not seen my other content? It's, if anything, the opposite criticism is true. But yeah, just very quickly as a side note from the content point of view, you'll have to bear with me a tiny bit longer before the FTA video. I'm still working on that. And actually, in terms of other news, so 1, FTA video is still being worked on. 2, this week is pretty much the last week of the newsletter being paid. After that, we're looking into making it free. I mean, it is going to be free. We're just trying to do the transition bit smoothly. And number 3, as a little secret, next month, we're going to do our best with Donald to actually make weekly YouTube videos for this channel. Right? So not like hour-long live streams, but maybe 5-10 minute videos on whatever's interesting, maybe a coin is popping off or something you want to talk about, and kind of grow the channel, not just via the live streams, but also by having videos on the channel and to keep you going between the Monday, Wednesday, Friday session. Again, that's not fixed. We haven't committed to that. It's not part of our contract either, for those of you who care about that type of stuff, but we just thought in order to grow the channel and in order to be more algo-friendly, it'd be nice to have some short content as well as the live streams as well. So yeah, to 11 minutes, as Olivier says, would be fantastic. So yeah, that's kind of where we're at with the content side of things. And yeah, making the newsletter free is great. Thanks, Bob. It's a big thing for us as well. Definitely don't regret launching it as we did. It made a lot of sense. But just generally, especially with the way how things have developed and how some of our peers in the space are moving, we kind of want to hark back to our roots and make as much content, well, pretty much all content, freely accessible and reach as many people as we can. So that's kind of where we're at with that. And Carl says, video on long-term profit-taking strategy. The video on FTA is essentially my system for not only profit-taking, but also, to an extent, entry triggers and trade management. That video is going to be really good, so keep an eye peeled for that. Oh, and also, we're also getting some graphics upgrades. So we're going to have like some nice banners, kind of a welcome screen. We're trying to give everything a bit of a facelift, make it a bit more professional, get shorter videos on here, more content, up the graphics. Hell, if there's enough demand, we'll go buy face cams and shoot the shit with Donald with our mugs on the screen if you people care about that type of stuff. The sky's the limit with all this. And again, if all of that or any of that sounds good, any likes in the video are appreciated. And I think a good time now is to actually give a quick summary of Bitcoin and, well, yeah, ETH is pretty self-explanatory. We'll quickly summarize Bitcoin, answer any questions in the chat, and then I will leave you to get along with your Mondays. So, Belgium, all the live streams are replayable on this channel, so you'll be able to watch anything back as many times as you'd like. So Bitcoin, we're getting our first bit of volatility from our monthly and daily level of support, which is good, okay? If we get a daily close above 95.30, that would mark a short-term but still significant daily break in market structure. Okay, that would also be positive. Now, intraday is really where I think the source is at. In order to stay bullish, I think price has to, at this point, form a higher low. I do not want, personally, price revisiting 92, 9300 again if this breakout is to be trusted. The only antidote to that would be some sort of real spike, and then reclaim. So a failure at the lows, that would kind of be the permissible bullish version that pulls back to the box. But if we're following our basic market structure instincts, I don't want price to trade back to the level that has been so good to us. So what are the alternatives in order to be bullish? We have this gray box as our kind of shallow intraday support. So any pullbacks into that, which get bid, I think on intraday level, on an intraday basis, you've got A, support into B, resistance. Again, this is from a technical analysis point of view. This isn't a setup that I have in my repertoire, not something that I take personally. But in terms of continuation following this break in market structure, A, and this kind of gray box is a reasonable area to do some intraday swinging, okay? Alternatively, as we said, I don't want price revisiting the red box, so, but still, given we've got a higher high here, right, you've got high, higher high, the question is where can the higher low form? The closest level to invalidation, I think, is pretty much this red line here, right, the breakout level itself, which lands at around 93.70, 93.50, thereabouts. So even if we don't get the shallow pullback, something like this, okay, I would want the lows to stay in, and then A to pretty much the same B. Okay, from a technical analysis point of view, if this thing is bullish, it should be making a higher low somewhere in this region. Okay, either the gray box if we're really aggressive, or the breakout level itself for a more pronounced pullback. Now, in terms of fading this or being bearish Bitcoin, difficult proposition in terms of levels above market, and there are two reasons for that. One is this consolidation that we talked about is intraday, whereas we're rallying off of higher time frame levels, so fading that according to time frame precedents, it's, you know, kind of lower probability. I always want to be fading daily moves with daily or higher levels, not fading daily and monthly moves with 4-hour levels, just something that I look at personally. So this level is kind of a question mark, but technically valid. And then the question, oh, well, do you resell 10K given how well it acted last time? For me, the answer to that is also no, because I think if we really pick up volatility here and start running towards 10K, the probabilities shift from being a technical retest of resistance more towards a short squeeze scenario. So that's not somewhere where I want to be bearish. So where is it reasonable for me to be bearish? Unfortunately, as boring as it may sound, things have not changed. From that point of view, in the last week, we're still within this range. So if I want to get bearish, I need support to fail. I'll sell rallies with a wide stop and take it from the midpoint into the range low. Okay? General context-wise, I'm certainly being careful fading this, not only for the technical reasons stated, that I don't think this level is great, and I'm definitely not selling this level, but generally, if this is the start of the volatility everyone's been waiting for, we're coming out of a week of consolidation, and I don't want to be the one to throw my body in front of what could be the start of a running locomotive. Okay? That's pretty much Bitcoin. Any questions? Was that helpful? Does that make sense? Olivier asks, on higher time frame, does this price action within your key range bound levels look like an inverted Adam and Eve, rounded top with low volatility after rallying? Yeah, I mean, yeah, to some extent. Again, I'm surprised, actually. Price respected this boundary so well. I was expecting, as per last live stream, trading to be done below it, which is why I was reluctant to buy it. I still bought it because I got a nice setup, but I got stopped out at the bottom. That happens. But yeah, obviously that kind of, and we talked about it on intraday time frame, there's some significant shifts in momentum where you had really aggressive or more aggressive downtrend, lower highs, lower lows. You can see it starts to even out at the level, right? It goes from aggressive, evens out, breaks market structure. I bought the pullback, got stopped out at the bottom, and then price shot out, right? And this is kind of almost a fractal lower time frame version of what a higher time frame reversal looks like, right? You've got your aggressive dominant trend, lower highs and lower lows. You get a slow down in the dominant trend as the lower lows stop when you get equal lows. You get your first bullish impulse when you get your break in market structure, and then you get the pullback, which basically decides if the market's bullish or not. As long as the low holds, you then get your kind of reversal model, type of thing, right? Pretty important technical structure to be aware of. Not even technical structure, but it's important to be able to eyeball shifts in momentum. Like if you can't tell the difference between kind of this price action and this price action, you should just be able to eyeball it, right? And even if you can't eyeball it, that's why market structure is so important. If you've got no sense of this type of stuff, which is fine, although I think screen time builds it up, you can always just look at, is price making lower highs, lower lows? How is there continuation? Is price kind of slowing down as it did here? Has price shifted? Is it, instead of making lower highs and lower lows, do we actually have a higher high and then a higher low, right? It's important to spot these types of moments. Thoda asks, what do you make of price action below time frame chopping around a lot around your high time frame levels? It depends what you mean by chopping. If the price action on intraday is really not nice around the higher time frame level, I'll do two things. One is just look at the higher time frame closes. That tends to filter out a lot of the noise. And number two, if even the higher time frame closes around my structures are noisy or messy or incoherent, I'll most likely ditch the structure entirely and look at something else. That's the answer to that. So kind of a troubleshooter is, one, if you're getting chop around high time frame levels, just look at high time frame closes. Number two, if that chop isn't resolved by the higher time frames, it's probably worth looking at something else. I hope that answers your question. Okay, I think that's all I've got for you for this evening. We've looked at our alts. I think with respect, Neeraj has asked for KMD 10 million times. We'll add that for next time. Okay, so we'll add Komodo for next time. Good session. Got to talk about a trade. We've talked about Bitcoin, trade ideas and levels that I think are important. We've talked about ETH, DeFi, news, all of that type of stuff. And obviously had a chance to share with you about upcoming content and where we're going with the channel and everything of that sort. That's all I've got for you for this evening. I hope you learned something. If you did, or if you didn't, I'd appreciate a like on the video, leave us a comment, subscribe to the channel. We are live every Monday, Wednesday, and Friday at 7 UTC. And of course, the only reason we can do that is because of our sponsor Bybit. Very kind of them to do this. So you can find their links in the description. Any evidence that we can provide to them as the month comes to a close, that it's not just my Russian colleagues watching the live stream, I'm sure they'd appreciate that. So go click on those links, say hello, say thank you, engage, show signs of life. That'd be fantastic. But that's all. Next live stream will be with the Duck on Wednesday, and I will inevitably be in the chat to talk shit and bully him. So I hope you have a fantastic start to the week. Remember, momentum is always working. It either works with you or against you. That's not even a trading thing. That's just life advice from a 23-year-old. So go get what you want, what you deserve this week. Gonna stop the motivational drivel. Take care, gents. Have a fantastic week, and I'll see you on Wednesday chat and then Friday, Casual Friday. Take care. Until next time.